Stephen Cox back from Share Navigator, and this is again is part three really of the three simple ways to forecast the future share price of a company, and it's based on the price to sales formula. So that's what PS stands for, price to sales. So the formula is simply the share price equals sales per share, so the revenue per share multiplied by the price to sales ratio. So again, just note that this formula is explained in greater detail in our full stock market investing course. This is a short video course, so we're not going to get too bogged down in explaining these in greater detail. If you want to know more, go to Google or go to our course. We're going to use Alaska Airlines as an example. The share price is currently $38.50. And we're going to see, is there any upside potential based on forecasted earnings? So again, we're going to go back to the TradingView site. We're going to type in Alaska. So remember, I've already showed you how to get access to this information. It's totally free. And this time we're going to click again on kind of these four squares, and it'll be highlighted here. It's called metrics. And we're going to click on financials. And you can see here, it'll automatically populate here to statistics or overview. We're going to click on earnings, and remember to change it from quarterly to annual, and the same down here on the revenue side from quarterly to annual. So again, it's giving you the last 5 years of data. If you subscribe to TradingView, it'll give you a lot more. You don't need that subscription in my opinion, but if you want to go and get it, off you go. But we're looking at here the forecast for sales into 2025, and you can see the analysts on average are forecasting 11.36 billion in sales. So remember, that's an average, okay? So we will plug, we have that one piece of information, but that's total revenue. We need to get the revenue on a per share basis. So remember, all we need to do now is get the amount of shares on issue or outstanding. And what we will do is divide 11.36 billion by the amount of shares outstanding. So where you're going to get that data, come back to statistics, again, click on annual, and you're going to see under key stats, total common shares outstanding, and you're going to see 126 million. So remember, we want to convert that to billions. So 126 million in billions is 0.126 billion. So we'll go back to our presentation. So we know that the estimated sales is 11.36. We know that there's 0.126 billion shares outstanding. So 11.36 divided by 0.126 billion shares outstanding gives us a sales per share of $90.15. So sales per share of $90.15. So now all we need is, well, what is the typical price to sales ratio that they use? Remember the second part of the formula here. So we've got the sales per share of $90.15. The price to sales ratio, we need to go back here to our statistics. And we can see here over the last 5 years, we've got the price to sales ratio for Alaska Airlines. So this is what it traded at. And you can see in most recent years, it's 0.46 all the way up to a high of 1.8 in 2020. Again, remember what happened in 2020. That was COVID. So all of these metrics are off during COVID, so you ignore them. And actually, I would focus in on the lower end here and go from like 0.46 to 0.57. So we're going to use that as our range. And again, deciding what valuations you use really comes down to, the expected growth going forward. And again, what I bring into this little chart here and say, okay, well, we're seeing forecasted growth in Alaska Airlines revenue going forward. It's not huge growth, but it's forecasted growth. And that's why I'm saying, even though there's growth, it's not huge. And that's why I'll kind of be on the lower end of the valuation multiples to be a little bit more conservative. That's the reason why. So we're going to plug that into our formula. We're going to look at the low estimate, which is our sales per share of $90.15, multiplied by the price to sales range of 0.46. That will give us a target price here of 41.47. And then on the high side, substituting in 0.57, you will get a target price of 51.38. So again, if we got an average of both of those, the target price based on the price to sales formula will be $46.42. So that's another estimate now based on the price to sales formula. And remember, if the current share price is $38.50, that's upside to the current share price. But now what we're going to do is take a further step. In the last video, we're just going to do an average of all three. and we'll discuss that in greater detail in the next video.